Wall Street's rate hike fears wreaked havoc on high-growth tech equities, once again putting Cathie Wood's ARK ETFs at risk. Wood fearlessly maintained her view that losses were temporary, even stating that ARK Invest anticipates inflation is indeed transitory, based on the other economic measures such as velocity. The GDP to money supply ratio has decelerated since its peak at the onset of the pandemic. Despite her solid stand, why did she say that everyone could go wrong in 2022? Will her claim stand out, or will she lose her credibility? In this video, we will try to look at how inflation and economic predictions will reconcile, given that our economy is still healing. Stay tuned with me till the end and let us learn more from Cathie Wood. Cathie Wood, be careful about 2022. Cathie Wood, a Rockstar stock picker, believes the stock market is in a bull run that will keep investors smiling as long as the United States avoids a recession. Despite what investors like Michael Burry have predicted, Wood recently told Barron's that the market will probably be fine. She further encouraged everyone that value stocks, cyclical stocks, and defensive stocks have all continued to rise despite what COVID-19 and a disrupted economy have thrown at it. She predicts that inflation will unwind quickly. The year has gotten off to a shaky start, following the Democrats' sweep of both the House and the Senate. Cathie Wood stated that she will be focusing on capital gains, tax rates, and corporate tax rates this year. Today, Wood indicated that the market appears to be focusing on the likelihood of at least another $1 trillion in stimulus, and the bull market is already widening. She also conceded that she was incorrect in assessing the stock market's influence in the short run. Wood stated that they are already noticing the surprises compared to their expectations, adding that these are the greatest surprises she has ever seen in her whole career. Rising interest rates have pushed down on the type of high-growth, high-value companies in the ARK Innovations ETF's portfolio, which is down 7.6% year-to-date. Zoom, for example, is expected to have astonishing growth rates ahead, while Teladoc will become the backbone of the U.S. healthcare system, according to Wood. Meanwhile, she predicts that inflation will fall this year as supply chain bottlenecks relax and companies no longer feel compelled to place double or treble orders for items. At the same time, technology will continue to drive down the cost of goods and services. Hey, take a breather there for a moment. We're almost there. If you have not yet subscribed, please click the subscribe button to ensure that you don't miss any of our videos. Every investor was taken aback by the M2's annual increase of 26%, as this had never happened before. M2 refers to the sum of money in circulation, including checking accounts, cash, and other financial assets. The 26% increase in M2 takes on a new significance, leading to a slew of further questions. If Wood is correct about the scale of the coming cycle and the worries linked with rising commodity prices and dropping currency, she believes the Fed will have to rethink its objectives. According to Wood, early indicators such as the dollar's decline while the copper prices have increased by 75% indicate that we would experience more substantial inflation than most people predicted. Wood also believes that it is a cyclical supply-demand imbalance that will not become endemic. As electric vehicles and collaborative robots become more common, the deflationary undercurrents linked with the innovation platforms and technologies that are growing at the same time will become more potent, according to ARK's CEO. They aren't at a high enough base yet to move the needle much in the coming years, and get to a point where the markets will feel the deflationary impact. Cathie Wood also brought up an interesting aspect of the average hourly wage. Another intriguing aspect of the employment data was the growth of 0.8% in average hourly pay. Wood says the last time she saw a high number was in the late 1970s and early 1980s, when inflation was double digits year over year. She stated that average hourly wages are increasing by 5.1%. She noted that the government stimulus will determine the GDP in the first quarter of this year. The fact that the financial market is a leading indicator becomes clear. The cyclical is moving up beautifully, which gives us a lot of hope that we're still on the correct route. Inflation continues to shock on the low side of estimates, ranging from 1% to 1.5%, leading many to believe inflation is dead. Wood recounted her experience as a newcomer to the sector in the early 1970s. Many people thought inflation was gone until 1973. Inflation spiked dramatically when OPEC slashed production and oil prices quadrupled. That was the start of the unhinging of the United States' departure from the gold standard. I'd argue that monetary policy isn't tied to anything, so there's a risk of inflation with money rising at a rate of 26%. For Wood, the question is whether people will save their money to keep velocity low, or will we grow into a mindset where consumers and businesses see inflation and interest rates creeping up? Why don't I do this or that before inflation interest rates continue to rise? People would argue. We've had an inflation problem if that happened, she said, adding that it's the same as stating that the velocity of money would increase as people want to get rid of their dollars as quickly as possible to buy goods and services before they become scarce and interest rates rise. She believes that if money continues to flow into asset markets, the velocity of money will diminish, reducing the danger associated with a 26% growth rate. The bullishness expressed in the study is a reminder that for many investors, stocks remain the best choice in what is still a low return environment, despite all the chatter about inflation and the nervousness on global markets. On the other hand, Wood is well versed in the art of stock selection. Subscribe and hit that notification bell to help us produce more wealth-building content. You can count on Dinero Association to keep you up to date on the latest financial and economic developments. Tell us what you think about this video by leaving a comment below. We are Dinero Association, your partner in building wealth.